Hello everyone, welcome back to my channel and don't forget to like, comment, share and subscribe. The US shipped out the most crude and refined oil product in 3 decades as energy-starved economies increasingly turned to American supplies to stave off strong targets. More than 11 million barrels of crude and products such as diesel fuel left U.S. ports on a daily basis last week for overseas markets. Government data showed on Wednesday that was the most in data going back to February. The diesel led the surge with a 20% jump in export while crude outflows exceeded 4 million barrels a day for a second straight week, the first time that happened since lawmakers lifted a decades-old export ban in late 2015. Europe and Asia are grappling with some of the worst energy crises in history, and oil supplies could soon get tighter. Saudi Arabia's oil minister earlier this week said the OPEC alliance would consider production cuts to address the dislocation between futures trading and fundamental supply and demand forecasts. Nearly one day's U.S. production, that's what total oil export out of the United States for last week were, reaching a record of 11 million barrels, government data on Wednesday showed. But crude price meanwhile extended their rally for a fifth day out of six. Global benchmark Brent clung to above 100 per barrel, although the market did struggle most of the session as traders agonized over the potential for another outside US rate hike in September and the likelihood that a fledgling recession not in the United States over the first 2 quarters of this year could deepen and affect Europe and the rest of the world. Equally, at the top of oil traders' minds was the additional supply that will come onto the market if Iran gets a renewed nuclear deal with global powers that will remove US sanctions on its oil, allowing its legitimate return to the export market for crude. New York traded West Texas Intermediate, the benchmark for US crude, was up 1 or 2% at 9 per barrel. WTI has rallied with few stops since hitting a near 6-month low of HT5 on August 16. London traded Brent settled up 1 or 1% at 1. The global crude benchmark has rallied since hitting a low of 6 days ago. Recession fears aside, one reason for Brent's relative underperformance against WTI on Wednesday was the superior export performance of U.S. crude versus global competing oil traders. At the rate the U.S. is exporting oil, Saudi Arabia and the rest of OPEC should be worried for their market share, said John Kilduff, partner at New York-based energy hedge fund Again Capital. The U.S. is nearing one day's production of oil for the combined crude and product export it is doing, Kilduff observed. Erosion of market share was what led the Saudis to ramp up production before the pandemic to try and kill U.S. shale oil, although U.S. crude production remains below pre-pandemic heights. This sort of export numbers will raise Saudi eyebrows for sure. They won't like this on bit one bit, I can tell you. The United States exported 4 million barrels of crude during the week ended August 19, After a record 5 million barrels in the previous week to August 12, the Washington-based Energy Information Administration, or EIA, reported in its weekly petroleum status report. In addition to the crude export, there were 6 million barrels of gasoline shipment and 2 million barrels of other oils that made it for overseas sales last week. The total of 11 million overrode last week's grain oil sales of 10 million. Okay guys, maybe that's all from me. Thanks for watching and don't forget to like, comment, share and subscribe. Thank you.